Welcome to TradeTheNBA.com. This is John. This reports for the 26th. Well, pushing up back to new highs. So congruent with our expectations, given what we've been seeing from a short activity standpoint here on the NBI reading. NBI Magenta is still above that 33 level, back and forth a little bit. So you're going to get these soft pops. This is what we were talking about. There just isn't enough short activity to push things through. So this has all got to be new buy activity at this particular stage. When we look at the DOC, it was that steel moving back above the negative 13.5. And of course, we get the spider effect from a bullish standpoint. When that's inverted and we get that kind of crossover, it usually indicates that it's shorts being stronger, like when back over here for DOC spread. But in this case, with the green above, it's congruent to continuation. And kind of what we're seeing when I do look at the DOC, if we wanted to really see a strong continuation, you'd have orange stuck between cyan and red. Don't quite have that, but of course, we already know that cyan under red is always a buy situation. So that's no shocker there. The NASDAQ been particularly weak relative to the ES, and you can see that indication right here as that magenta has fallen through and really hasn't produced a whole lot of anything. So the S&P at near highs and or moving above to make new highs, NASDAQ nowhere even close to that. And you're starting to get a little potential of the change on that as the ES has sort of helped elevate things back up and given the reset, but notably it's been weaker from a NASDAQ standpoint. And from a Treasury standpoint, of course, that realization that the Fed isn't changing course because obviously they can't seem to get the oil situation completely under control. And if that had faded, I think you would have had a much stronger move from Treasuries going higher, because that would have indicated to the Fed there really isn't going to be an inflationary pressure. But this is what we're getting from oil, and that's going to add some confusion, uncertainty, and speculation on that front, and that's a problem. And then you throw in the potentials for what we're seeing in Europe and Ukraine with movements and bombings and things near the Polish border. The potential for heightened escalation in that conflict that has been sort of backburnered for quite a while could pose a whole another set of potential crises that some people will be weighing into their factoring. From a euro standpoint, you had the big pump up, and then of course we get the news from banks. What a shock that, in fact, their loan volumes and that have plummeted and actually just cratered to a level they haven't seen at all. And the ECB talking about raising rates. Are they going to be able to do that within a condition where banks are basically not even lending any money out now? And you really have a conundrum right there, because to raise rates in the face of that could really pressure banks to a point where, they're already illiquid here. How do you stave that off? So, interesting question, how the euro survives within this environment, and how do they keep up with the U.S.? They're not, so it's really an interesting conundrum, and how long they can keep that up. We'll see. They've done a fairly good job so far, but it just takes a matter of, people seeing the reality of these things, going against it, and then there's a sufficient amount of money that's able to push that trade the opposite direction to force them to cover, and that's what that spike was. And we all know there aren't that many individuals and or entities that can create that kind of counter move, but because it takes a serious amount of resources. So we'll leave it at that. But gold, with oil, we talked about it, it would start to pop back up, and sure enough, that's what we're seeing from it. And if oil remains where it is, I think you'll start to see gold continue to move. Zero activity from your crypto here. Bitcoin just has filled this one with the move the other day, coming back down below, and still overall weakness here. We are seeing the potential for a crossover of magenta over yellow, but still hasn't eclipsed the short reading right there from the NBI white, and you can see it's about to get orange in between the cyan DOC spread here, which initiated that overall sell run on it. And if that magenta gets in between there, if you have, the orange moves between cyan and red, that usually creates the continuation mode. So we'll look for that one to take place. From an ETH standpoint, absolutely nothing as well. From our 50K, so we pop back up, created the nice matching high. How beautiful. And starting to fade here in the post market from there, and the trade got out, understanding that potential move. So a lot of people are going to be watching what happens here, because that would be, what they look for. And then beautiful double top. And again, though, we're just not seeing the short activity. So this is just a question of whether people are taking profits at the peak and being satisfied with that. From an intraday standpoint, we looked at it. There was this pretty steady incline all the way through. Then the late day profit taking filled back in. A couple of little positive extremes started right at the breakout. So filled those in beautifully. And post market there, they started to pop it back up and faded that again. And there just haven't been enough new buyers here in the post market to keep things above the line, and that is because the news out of Europe is not particularly helpful. So that being said, you're still getting a euro rally within the face of this expectation the ECB will raise rates into what is a few months from now potentially a very serious banking situation, with that degree of loan volume drop, and that where they're going to get excess income from interest other than buying treasuries from the ECB. Uh, that has its own set of problems, because it's what they've already been doing, and that's what caused a lot of banks to get into trouble, because they were buying them at exceedingly low rates. So all things being equal, market's just going to continue to plug away softly in there, and I think you're just going to get a mixed match of up and down until we start to get a little bit of clarity as to if that oil situation is going to continue. And I think that would be the first driver of really putting the market in serious pressure zone. And at that point, we'll probably see some more activity. But for now, all quiet on the market front. As always, though, I'll update you on the Skype chat. If anything relevant happens, trade well. We'll talk to you later.